Over the past year, I have over doubled my net worth. And no, this wasn't going from $1 in assets to $2 in assets. This past year, with the insane market, has given my portfolio some insane returns, going from 5 figures to multiple 6 figures in a short amount of time. I want to show you how you can do something similar as well. With typical stock market returns, with a 10% annualized gain, it takes over 7 years to double your money that you put in. But in this video, I'm going to show you a simple way you can do this much faster, much quicker, in under 1 year like I did. Now, this isn't a video that's just going to say, buy and hold some Bitcoin. I'm going to give you some real practical steps, some mindsets, so hopefully in 1 year, you can do the same thing when the timing is right and make some life-changing money. As usual, though, none of this is financial advice. I'm not a financial advisor, guys.
Knowledge.
Now, let's start with the very basics. And if you're not at the very basic point yet, you can't do what I'm about to show you later in this video because you won't have money. Yeah, you can double your net worth $5 to $10, but it's not really life-changing. The basics you need are you need to be saving more than you're spending. Duh, that's the basics, right? And you need to be able to save a decent amount. If you're living paycheck to paycheck, the strategy isn't going to work for you. This mindset is still applicable, but it's not going to really make life-changing money. If you have 10 grand saved and double that, you now have 20 grand, and that's amazing. That's really good money. But 20 grand can be gone really quick. Car repairs, you need some house repairs, another medical expense comes up, whatever it is. But if you're able to say, let's say 50 grand, that turns into 100 grand turns into 200 grand. Now we're talking doubling these numbers. That's some real money that can change a lot of things for you. And it'll take a bigger catastrophe to suddenly erase those away. So step one for the basics, how do you save a lot of money? Work more, get 2 jobs, do overtime, go back to school or trade school for a higher paying career. Whatever you need to do that to make more money and spend less money. It's really that simple, guys. Simple doesn't mean easy, though. Now, I have to acknowledge my own blessings. Gabe got me a position over the past couple of years to work a salary job, do an after-hour job with a good high hourly rate. And then I was working like Amazon affiliates, some minor YouTube profits that I got as well, just good side money that covered most of my expenses and my money. So I was a single man living at mom's with not many expenses, so I can save a buttload of money before I'm even 30 for like the past 4 years. Now, you're probably not in a position like me. I acknowledge that. But maybe there are ways you can decrease your own spending and increase your income as well. Those are for things you to decide. I don't know if you got kids, married, other chronic health expenses, other obligations. I have no idea what's going on in your life, man. So you got to figure out your own way to make more money and save more. That's going to be your own homework for yourself. You need to do this. You need to do the foundations, the foundational habits, saving more than you spend. This is the ground layer, and then you can work on the other things. Now, as I said in the beginning, it takes a little over 7 years to double your account. And I'm going to show you this on a compound interest calculator. So let's say we were able to save $100,000. Let's say we got a 10% interest return. Let's say for 30 years. How long does it take for our money to double? If we plug it into the calculator, we start with $100,000. We can see our balance hits $200,000 about 7 years. And then to that double again, about year 14, $403,000. And then year 21, we're at $809,000. So every 7 years with a 10% annual rate of return, you're going to double your money, which is good, but it still takes a long time. And you can see even here, it's investment doubled after 7 years. Now, once you have this in order, having a decent pile of cash or assets, which is essential to increasing my net worth quickly. So how do you do it in 1 year instead of having it take 7 years? Here's the secret. Are you ready? You need to stockpile in assets others deem too risky when the timing is right. I'm not talking about a meme coin or a random marijuana stock or some random stock that could go to zero. But what if we invest into assets that were tied to indexes that had outsized returns? What if we used a little bit of leverage? SPY and QQQ always go up. This is the American economy. So how do we make outsized returns if we know over time this is our edge, just investing in something that goes up in the long run? How do we beat that? We beat that by adding some leverage, because we know the trend is up over time with the American economy. If we know this, why do we discard leveraged versions of these funds? If we look at something like QLD, ProShares Ultra QQQ, 2XQQQ, you can see this has been on a rip since the low. That's been a 200% gain. If we overlay QQQ on this, you can see it's been smoking the index for a long time now. This is a long historical trend, and it stays true at this time of the recording. The funds go up over time. This is the American economy. So why don't we use these funds or something like Bitcoin to get outsized returns? None of these funds are going to zero. Bitcoin's not going to zero. These leverage funds are tied to the indexes, and Bitcoin's not going anywhere. So why are we so risk adverse when we have so many opportunities to seek risk? In the past 5 years, we had two major opportunities. We had COVID crash right here, which was about a 33% drop in a couple of days. And then we had the bear market of 2022, which also got us a 25% correction. Why are we so skittish when the numbers go down? This is the time we start thinking aggressively and investing aggressively. We all know this, but we don't do it. Now, if we look at something like TQQQ, triple leveraged QQQ, and if you've seen my video on if I think TQQQ is a good buy and hold investment, in that video I say it's a risky play. It's probably not that good for buy and hold, which it is. I mean, most of us would not be able to hold TQQQ when it's down like 80%, right? Most of us don't have that psychological strength to see our portfolio vanish in front of our eyes, which these ETFs can especially do, especially with TQQQ. That's a large drawdown, and in COVID, it would have been something similar. You would have had about a 70% drawdown in a matter of days. That's a lot of psychological strength. But what could we accomplish if we took on some risk and if we use simple systems in these asset classes, triple leverage funds, something like Bitcoin, a double leverage fund, and opportune times when the timing is right? I show you how to check if the timing is right in this video right here. What if these assets are just a portion of our portfolio, like I also highlight in this video? What if we took a long-term approach and used the volatility to our advantage instead of being a day trader and getting smoked in the markets? What if we took a longer-term time horizon approach when we notice the funds are down, start allocating some of our portfolio into more aggressive assets like these that are tied to the markets, and we know markets go up over time? That's your edge. The markets go up over time. There's no easier edge as an investor. You don't have to think. A number go up. Look at this number. The number goes up. So when the stock is cheap, you have to remember, number go up, especially with leveraged funds. So how did I personally double my net worth in under 1 year? I took this philosophy, number go up, and I applied it at the right time. I bought Bitcoin at an opportune time, and I was lucky enough to still be holding on to it. That's really it. To get heavily in Bitcoin when it was beaten down. You can see this arrow around August 23 is when I started getting in, and I posted my video about Bitcoin. The risk to reward ratio, and if you're curious about how I viewed that, you can watch the video right here, was skewed to the upside and provided me outsized returns compared to the risk. I sought out something volatile that has a history of insane gains. Look at this, number go up, and I bought when the time was right, and I got extremely lucky. I'm not gonna lie, I just bought at a decent time, not to my own doing, and I just held on, okay? But I also plan to sell when the timing is right as well. That's the essence of this strategy. Now, when the opportunity is right, that's something for you to decide. When something is right to buy, when something's right to sell, right? If you think number go up November 21, you're gonna be holding on for a long time. It's a very simple mindset, but this is the problem, and most of us can't do it. Most of us can only think number go up when we get to these insane levels of excitement. This is normal market psychology. Look at this cheat sheet. We've all seen this before. We only start to think number go up when we get to belief, thrill, and euphoria, right? And then complacency. This is the time we think number go up when we should actually be more fearful. We should be doing the opposite. We should be thinking number go up when we're at these bottom stages: panic, anger, depression, disbelief. Number go up over the long run. So why are we so pessimistic at the times it would be the best to be a bull? We should be a bull in the bear market. That's the best time to buy. You're conditioned to only think number go up when things are good, when things are pumping. As a big chart, you only think number goes up when we're near the peaks. That's when we get altcoins and meme coins and lose all your money. I'm saying this in such a stupid term because this is how most of us trade and invest. Our lizard brain takes over and we can't think clearly because we're psychological beings, right? We're stuck in our emotions. Financial news is never bullish in a bear market. In reality, that'd be the best time to be a bull in a bear market at the down squeeze. When you can get assets for cheaper, that's the best time to be a bull. Not when everything's pumping and the Bitcoin pumps to $100,000, then you want to invest, instead of when we hit $50,000 right here. This is normal psychological thinking in the market. So this is the key takeaway. When numbers go down, you need to think number go up. And when numbers go up, you need to think numbers go down. Be the opposite. Be a bull in a bear market. Now, this doesn't mean you ape in all at once, but maybe slowly start building a position in something like the great chop right here. This would have been a great time. Bitcoin was down here, right? This would have been a great time to accumulate, even if you had some losses, even if you're holding for a long time. Now, can I think number go up and double my money every 2 years? No, that'd be insane. Absolutely crazy. But if you're patient, don't get psyched out, hold at the right time, start buying at the right time. And I still have trouble getting psyched out. Don't get me wrong. That's definitely the hardest part, but you're ready for some outsized returns when you're buying in these accumulation periods and then holding at the time. Bitcoin, TQQQ, SPXL, QLD, all these assets would have provided you with insane gains in the past year. Heck, the past decade, if we had a little bit of balls to get in when these prices drop a significant amount, we would all be millionaires. But the hard part is the psychological part. The hard part is holding on when we hit these troughs and learning to buy, and then selling when we hit euphoria. That's the exact opposite of what your brain is telling you you want to do, because we all get greedy right at the top and then fully going. Now, this doesn't mean you ape in like I did. This played out for me pretty well, but it could have played out in a million different ways. But the most important thing is to seek risk when we're down bad, when everyone is the most fearful. Don't let basic market psychology mess up your gains. That's the real issue here. So remember, you need to start thinking number go up when it's the hardest to do. You need to start thinking number go up when we hit these parts: depression, anger, and disbelief. Now, if you want an insane trading strategy that would have turned 100K into $2.5 million in a little over a decade, you need to check out this video right here. Just remember, number goes up until it doesn't. Not financial advice. God bless, guys. Peace.